The RBA is set to hold interest rates again tomorrow, and India's economy has its big moment on the global stage later this week when it hosts the G20 meeting. It's coming up in our 5 Things in 5 Minutes. And in our bonus deep dive interview, we find out more about India's growth, in particular what rapidly growing EV production means for metals demand globally.
This switch, we think, which is starting to occur now, is really going to catapult India to be one of the biggest copper consumers in the world.
But first, in 5 and 5 with ANZ. Number 1, the RBA is expected to hold its cash rate at 4.1% tomorrow afternoon Australian time. ANZ's head of Australian economics, Adam Boyton, sees a hawkish hold and says to keep an eye on the key line in the RBA statement from last month. He doesn't expect much change. That line goes, quote, some further tightening of monetary policy may be required to ensure that inflation returns to target in a reasonable time frame, but that will depend on the data and the evolving assessment of risks. So that's what a hawkish hold looks like. We'll keep an eye out tomorrow afternoon. Number 2, iron ore prices in China rose late on Friday to a 5-month high as a series of interventions to support China's housing market boosted demand and sentiment there. Oil prices also rose to a 7-month high over the weekend on expectations Saudi Arabia will extend a production cut. A lot of talk about China's economy and demand for commodities. It's pretty downbeat right now, but ANZ's senior commodities strategist Daniel Hynes sees some pockets of strength for some metals, with signs of falling inventories.
And certainly for zinc, it's a metal which is heavily linked to infrastructure, and outside of the property market, we are seeing some growth there. But it also gets caught up in the renewable energy sector as well. It's certainly one which goes a little bit unnoticed, like some other non-core metals, but it still is a pretty important part for the infrastructure build out of this new energy sector. So it just highlights, I suppose, that even with subdued growth in China, we can still get some pretty good demand for commodities.
Number 3, non-farm payrolls data out on Friday night showed growth of 187,000 jobs in the US economy. Now that was a bit above the 170,000 consensus, but also showed higher unemployment and modest wage growth. Here's ANZ's head of G3 economics, Brian Martin.
There is evidence building now that the labour market really is starting to ease in the United States. We saw the participation rate rise by 0.2 of a percentage point to 62.8, which is the highest level that it has been in this recovery. So that's good news in terms of an increase of supply of workers, which over time should help to ease inflation pressures.
Number 4, US manufacturing data in the August ISM index showed the 10th month in a row under 50, which means the sector is contracting. But it was the strongest result since February. Here's Brian again.
Some of the subcategories within the report were really quite encouraging. Production rose back to 50, employment recovered, the backlog of orders picked up. And those things should be signalling that maybe we are bottoming in terms of the downturn that we've had in manufacturing over the past 12 months.
Number 5, China's authorities have moved again to support the renminbi. This time it cut its so-called FX RRR rate, the reserve requirement ratio, which requires banks to hold a certain percentage of foreign exchange deposits in reserve. The People's Bank of China said late on Friday this ratio had been cut to 4% from 6%, which encourages local banks to sell US dollars and other currencies and buy renminbi, therefore supporting it. The renminbi, or the CNH, strengthened from 7.3 yuan to the dollar to 7.26 by the end of the week. Now it's time for our deep dive into what's happening in India's economy, and in particular, huge demand for EVs and how that's electrifying the global metals market. I spoke to ANZ's senior commodities strategist, Daniel Hynes.
It is one of the world's biggest auto markets in the world, just behind the US and China, and essentially on par with Japan at the moment. But they're really pushing, like a lot of countries, for the EV market. Now, it has been relatively small and limited to sectors like the scooters in particular, but they're now really pushing hard to reduce not only their demand on fossil fuels, but obviously their air quality as well, which is a big issue in China. Now, the switch, we think, which is starting to occur now, is really going to catapult India to be one of the biggest copper consumers in the world. In fact, we forecast it will move into second position essentially over the next few years, which might surprise a lot of people. And there's potential upside if they hit their targets for electric vehicles, because the amount of copper that goes into an EV compared to a conventional car is astronomically higher in the sort of order of 6 to 7 times as much copper into an EV as into an internal combustion engine. So it is a game changer, and I think if they can hit those targets, which will be tough but certainly achievable, then we're going to see some really strong growth in demand for copper and the broader sort of critical minerals sector over the next few years.
You've put together an amazing chart showing the copper intensity, the number of kilograms per vehicle for conventional cars, hybrid EVs, battery EVs, and battery electric buses. You've made the point that electrification of transport systems, particularly in these high population, dense urban locations, will involve a lot of electric buses. Tell us about the copper demands for electric buses.
Yeah, and this is particularly important for India as well. They do have obviously a difficult infrastructure set up, and it does lend itself more to putting buses on the road rather than expanding their rail network, for example. And so, they're looking to really electrify their buses. They've just implemented a new policy to bring in essentially EV buses across their entire fleet. And the magnitude of demand for copper is astronomical. I mean, for a conventional car, as we were talking about before, about 9 kilograms in one of those. A battery EV car, about 80 kilograms, but an electric bus, 369 kilograms. So you could imagine, the increase in demand you would see just from that if we do start to see a strong build out of the public fleet of electric buses. So that presents a challenge as well as an opportunity. Certainly the market, the copper market, has been struggling to really grow. So producers are really going to have to dig deep and find new world-class operations to really fuel this growth in demand.
Daniel Hynes there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Monday, September the 4th. Catch you tomorrow for a full preview of the RBA's decision. This podcast was recorded for publication on behalf of ANZ. All associated disclosures and disclaimers can be viewed using the link in your media player or the ANZ website through which you access this podcast. All care has been taken to report the views of ANZ Research in the creation of this podcast, but as an independent host, any differing interpretations are strictly mine and not ANZ's. Feel free to contact your ANZ point of contact with any questions.